Hey folks, it's the TradePiks Gorilla here. Just wanted to put out a quick video. Remember, only observe, don't trade, keep your money in your pockets. So, for the past month or so, I've been working on this strategy indicator here. And basically, what it is it compares bars. So it looks at four different bars. It looks at the first bar, and if that bar is 66% larger than the prior candle, we met criteria one. Second criteria, the next bar, bar number two, has to be red and 67% smaller than candle number one. So it's an up and down. Number three, the third bar, has to be green and closes higher than the prior candle, which is candle number two. So we're bouncing back. And then the fourth candle also has to be green, and it has to go higher than candles number two and candle number three. Now, the premise of this is, of course, a breakout bullish pattern that I've been looking at. And it does exist. Not in every stock, not all the time, and it's random. I've not taken any of these trades yet because one of the things that I have been observing is, if you see on the screen here, this is a large view of NVIDIA today, earlier this afternoon, and it hit the pattern. And NVIDIA was moving up and down because of earnings. Obviously, earnings were good. And this is after earnings. So it moves up. We get the pattern. And it's complete. But instead of going high off of that fourth candle, which reached a new high in essence, it dumped down. And not only did it dump down back down to what was the prior channel, but you can see there on the right, it's got quite a few 4 bars all the way down, which means a lot of sell-off. So what I've been noticing is that what I thought in my mind could be a bullish pattern that I could use to identify stocks that are moving on for a potential breakout, what appears to be happening is that folks are putting in money, but they're waiting for others to also put in money, and then they're quickly getting out and dumping and taking their profits along with it. And what happens is, not only does that begin a shortfall to the downside, but a panic, and other folks also start to take their money. Like and subscribe if you like the videos, if you like me to continue to make more. And today is not about trading for me. I didn't take any trades. But I thought it was important. For the past 2 weeks, I've been wanting to make this video and show the folks what's out there. What is the premise of this? And I will go into more detail on the pattern and the behavior. But basically, what I'm trying to say is, from what I have learned over the past 20 months and from what I'm seeing in the market, is the whales, the big whales, are gone. They're not coming in. They're not coming in to save anybody. So if you have been trained to watch candle patterns, especially bullish candle patterns, assume that they do not exist. Assume that anything you see as a bullish pattern is going to go to the downside. That is the best way that you can help to protect yourself from going into trades in breakout situations. There are opportunities out there, and I know there are folks making money, but I am seeing more people lose money than make money. So, and I also hear and see other folks who are saying they're not trading at all. So it is a difficult market. NVIDIA had great earnings today. It may be a catalyst for a short move, but I would not trust it. February into March, I would rather wait. If you can wait 2 to 3 weeks, and don't let anybody tell you, oh, well, if you're not in the market, you're going to miss that big move. It's one day. The market will last for many, many years to come, and you'll have opportunities. So don't fret. Here's a little close-up, and I've marked the candles. As you can see there, we've got the break on the big green candle with the black number 1 on there. Then we have the red candle, which is number 2, which is our second step, and it dips down 60%. The numbers are arbitrary. My thought is that a big bar will usually come back down 50%, and then at 50% get another green bar, and then if it goes higher, then you can enter, because the pattern is, it means that it's going to break out. So candle number 2 is red. Then candle number 3 is green, like we want it to be, and it closes higher than candle number 2. So we met the criteria there, two sets of criteria. And then candle number 4, when we evaluate candle number 4, it is higher than both the second and the third candle, the 2 candles prior to it. And in this case, that even shot up higher than candle number 1. But the premise would be to enter right when candle number 4 reaches a new high above candle number 3 and number 2. In this case, what you see there is that candle number 5 took a nosedive, and then subsequent candles went up a little bit, but the only reason that you're seeing large candles here is because I have elongated the chart, because there isn't that much space or money in there, and then all of a sudden it drops, and all we see is green candles and then some red candles, and then starts to go down. So I'm hoping that if you guys see this, that you pay closer attention to the charts. And remember, here's the problem with patterns and with indicators and with candle bars. They are not a precursor to what is going to happen. They are only showing you what has happened. So for me, this pattern would work only in a bullish market, where the expected candle number 5 would shoot up, and then it'd be a 6th and a 7th, and maybe another pullback, and then go higher. So it is very important that if you have patterns out there that you're watching, and especially candle patterns, and if you're really one of those folks that really watches the charts instead of level 2, instead of any active trader window, that you pay close attention, because you're going to be behind the 8 ball, and it's going to be seconds. And the problem is that here, this is the 1 minute chart. So each of those candles is 1 minute. And there may be time for somebody to recover, but if you get in here on candle number 4, when it is higher than candle number 3, you've got about 50 seconds before it turns into that big red candle, dumps right back down. Now, if you're there to hold it, then it did go back up again, but there's no pattern for that. So don't believe the hype of candle bars. It is very important, especially as day traders, as momentum traders. If you're looking at long, they might be something of a little bit different. Now, excuse me, I am showing you this on a stock that is, trading currently at $196. And the only reason I'm using NVIDIA is because I logged in, and it's about after 10 p.m. on the West Coast out here. And I logged in just to see it. And I looked at a few stocks, and only NVIDIA was the only one that had the pattern. But I've seen the pattern on sub-dollar stocks. I've seen it on $10, $20, and I've seen it work. Go bullish on some stocks, not necessarily the ones that go parabolic, but I have seen it there. So if you're in the stock market fishing with your dollars, know that the whales have left. They're gone. What is left are sharks. And these sharks have systems, and these systems are very sharp, and they've got their teeth into the market, and they're going to go in and they're going to flood a stock, and then they're going to pull the rug right out under you, and you're going to be left holding the bag. this is how they make their money. You know, I remember years ago when somebody told me, "Oh, you can make money on the on the stock market if a stock loses value." And I said, "What?" Yeah, you can short stocks, and how does that work? And I started looking into it, and then I found out about margin and all of that. So I said, no, thank you. I don't want to wind up in a very negative position. But these sharks know the game. They've been at it for a long time. So this is NVIDIA again, and you can see there it's from today. I mean, after 5 p.m. onto 7:50 is what the chart shows, and it's got 1, 2, 3, 4 places where the pattern was complete. And the first 3 on the left-hand side there weren't as successful. They might have been a little bit successful, but the stock was moving sideways. The third one, right in the middle of the screen there, does the exact same thing, completes the pattern, and it goes up and then quickly dumps back down again 3 or 4 bars later. Now, eventually it picks up and it starts to move up again. And the only reason it picks up is because this is a sign of a bullish stock that can recover. So imagine you're up at 4 a.m. Eastern time, the market just opened, and you see something with news and it goes straight up, and your eyes catch a candle pattern, not this one, but whichever strategy you're playing, and you see the green bars and you jump in. Expect 1 or 2 minutes, or maybe even less than that you're going to be seeing a big red bar, because people are going to be taking their profits. They're not going to wait around, and you're going to be left holding bags. And that's going to happen across the board. So don't go fishing where there ain't no fish, guys, gals. Just stay back. Enjoy your life right now. Think about this. If you have a $2,000 account that you're trading with, right? Let's say that you're trading with a fees-based broker, and you're paying $130 a month. Well, your account is short by $130. You're no longer using a 2K account, and you go in 1 week and you lose 3 out of those days, and you lose to red bars. Your account's going to be coming down very rapidly and very quickly. There's no need to risk or make those risks. Not right now in the market. We have to wait, and we have to wait for the pattern to shift, and it has to be convincing. NVIDIA tonight is not convincing. All it's doing is it's giving us hope that maybe we've seen a change and a reversal is coming. I don't think so. I think that we're going to see this for another week. And if things continue the way they continue with policy and everything, we may be like this until May. And then the hope in May from the government is going to be, oh, we're going to cut rates, and that should help the market. Well, I don't think that's going to do it. I keep hearing that the golden age is upon us. Well, sort of. Gold is going up. So if you want to be golden, start buying gold before it hits 6,000, right? But the problem with gold is as quickly as it goes up, it can quickly fall back down based on what's going on in the world. I mean, we could have a potential war on our hands where oil all of a sudden becomes the catalyst, and that starts to go high and gold starts to fall down. So be very careful and weigh your options. And if you have a small account and that's what you have, keep it in the bank or keep it with your broker, however you want to do it. But don't risk it in the stock market. Don't hand it over to these folks, because these sharks are out there, and all they're doing is reaching into your pocket and pulling your money out. Okay? I've lost quite a bit of money. I don't call it a whole, it's over $2,500, I think, in the 20 months. And I chop it up to the experience, right? It's my tuition for having learned. But here, that's why I stopped last week. I said, that's it. I'm not going to continue paying tuition, especially in a very cold market. So this is where it's at about yeah, 20 minutes ago, and it continues to go higher. And the reason that I wanted to show you this is I was taking a look at all those bullish patterns, yet here there is no bullish patterns. The only one that might be is that there's a cup and handle there that has been built up, and it's moving upwards from 195 up to 196. But as you can see there, the move is less than $2. So, I mean, you can't trade options 24 hours. And so you're stuck doing the heavy lifting, having to trade at a cost of $190 plus on the stock. And if you're only buying, if you've only got a couple of shares, well, you ain't going to make much money, right? So the way to do that for these types of stocks is to hold long. That's what we're doing. We're up about let's see, what is it now? Almost $80 a share now. It's what we're up on our stuff and on Nvidia, and I think it's just going to go higher, but I think it's going to come down before it goes higher. I think we're going to go up and down. It's going to be a seesaw battle. So whatever your strategy is, whatever your candle patterns is, pay attention to them and don't get bitten by the FOMO bug and jump in and think that you're going to recover very quickly. If you don't have everything that these sharks have, sharp computers, sharp young guys, a fast internet, that's another thing. My internet, I live outside of LA, and my cable provider has to go all the way to close to the beach, close to the airport, and then before it hops on and the signal goes back up to San Francisco, down through Denver, and then back up to Chicago. So wherever the Schwab servers are, they're far away from me, and I get a lot of latency. When I'm gaming, you know, in the game and the raids in World of Warcraft, you'll have stuff, bad stuff, right? You'll have goo or fire or whatever under your feet, and you have to move your character over. Well, usually when I'm playing with others, the others have already moved, and I'm still standing in the fire, and I'm getting burned, and I'm bringing the whole team down. And it's the latency. So if you're not like this famous guy on the Warrior that trades, who is in Maine, who's probably right on the cusp of the backbone there, you're not going to get fast speeds. So just be careful out there and take it easy, save your money, and we'll keep an eye on the market. And then when we see a pattern shift, then we'll certainly hop back on and update the market and update you guys. For now, please stay liquid, and I mean money. Gorilla out.